Guys, national home prices have now fallen for the sixth straight month in December. So let's take a look at the state of the housing market right now. So national home prices fell for 6 straight months up to December, dropping more than expected. So they expected 0.4% drop, and it's actually 0.51%. And so looking at a chart of the 20 city composite and the national home price index in blue, composite in red, you see that the 20 city composite is down 4.65% year over year. And so these 10-20% gains year over year in these last 2 years or so are gone, and we're heading in a negative direction. And the Case-Shiller National Home Price Index is now back to levels of around March of 2022. And so these rate of change bars here are now negative for the last 6 months. And Bloomberg says the prospect of stable or higher interest rates means that mortgage financing remains a headwind for home prices, while economic weakness, including the possibility of a recession, may also constrain potential buyers. Given these prospects for a challenging macroeconomic environment, home prices may well continue to weaken. And that is not just home prices, but it's also apartment rents. So US apartment asking rents have begun to decline modestly. And so look at this run up from about $1,400 to about $1,650 in about 2 years. That's a big move up. Now it's starting to come down, albeit slowly. And so by looking at the 1-year price percentage change by metro from April to December 2022, you see the hot areas are still hot, but less so. And they are declining as the months go on, to the point where Seattle and San Francisco are actually in negative territory. And so San Francisco is the canary in the coal mine. It is down the most from an index of around 370 now to 337, about a 10% drop. Now remember, home sales lag interest rates, and so when interest rates were elevated, it slowed down, but interest rates dropped, and so it put some support to the home buying market. But now those interest rates that were below 6.5% are now back over 7%. So this is going to put a damper on the housing market. And if interest rates go higher, which they look like they're going to, because inflation is not beaten yet, then that will put an even bigger headwind on home prices. So looking at the Goldman Sachs Housing Affordability Index, we see that housing is the lowest levels in history, according to this chart, even lower than it was during the housing bubble around 07-08. So that does not bode well for home sales. And as for apartment rents, going back from 2019, the vacancy rate was as high as 7.2% during the pandemic and dropped as low as 4.1%. Now it's creeping up to 6.1%. So that should have some pressure on apartment rents. So if interest rates continue to go higher to fight our sticky inflation, that is going to affect what people are able to pay for a house because of the higher mortgage payments. So if you are trying to decide what to do in terms of buying or selling a house, remember that higher interest rates means lower house prices. As always, it's your money, so make your own decisions. Thanks for watching, guys.